Good morning, warriors. Hi, Claudia. Everyone doing okay today? Let's have a great week. Goldfinger, he's the man with the Midas touch. Who's got the Midas touch in here? Anyway, I'm looking to fade Midas sometime this week. A lot's going to depend on the RSI reading. As you can tell, I mean, the momentum has been tremendous to the upside here. But in form, I see a 1, a 2, and not a 3 yet, maybe 1420-ish, 1417. But then you look at this chart and compare it to silver, and I keep waiting for the gold-silver ratio to shift, and it hasn't yet. So the weak sister is silver. So let me ask you guys a question. What's the safer short? This, and I'm not even doing it yet, or this? Okay, you want to short the relative weakness, right? Okay, so the relative weakness obviously is silver. I'd like to see another high in silver, actually, because it peaked at 78. This time, I think if we pull back and do a little work and then make a move to the upside, it'll be different. So I have no fundamental reason for doing it, and weaker dollar, etc., weekly breakout, the whole world's long. One of the reasons, and maybe someone could verify it, one of my teammates or maybe some of you guys, is that the setup on COT right now in gold is pretty bearish. Commercials are pretty short, and they were very long at the lows down there a year ago. So I teach that you want to be on the side of the market with the commercials, but there's a difference between you and the commercials. You know what it is? Anyone know? They have deeper pockets by many zeros. Okay, so they can afford to be early. Plus, they might be hedging inventory, etc. So, it's a good thing to give you biases, but price action, like always, even against COT, rules. Everyone with me? Give me a Y if you're with me on that. So you want to be on the side of the commercials and not the small specs or large specs, but they have very deep pockets. Okay, so that can't be the only reason. So we'll see what kind of form we get on this. So far, I've been pretty disappointed with the action in the end, although they're trying to turn it. It's not going to take a huge week to get a reversal, but it's going to take quite a bit, 108.50. So, we're 120 pips away. But you can say so far that we're putting in a higher low, right? And with the dollar making new lows, it's one of the only dollar pairs it's not. So I'm underwater from last week. I still own them. I haven't added. And the reason is, and looks like my reason is going to be tested because, I'm looking for a turn in this stuff. Okay. So I think last week may have been it for a trough in the 10-year. And if not the 10-year, so here's a 1 hour. See, nice divergence down here. But the 30-year even has a better pattern. See this? Anyone know what this is right here? Sorry about that. This little area here. Any guesses? Exhaustion? Yeah. It's called an island. All right. This is the Grand Cayman Island that someone came to, and they're starting to get island fever, and it gapped down to the island, parachuted out of the plane to the island, and then the plane left, and here you are, you're on the island, and the market's leaving without you. So it's called, there you go. island bottom in bonds. So I still think that this may have been the low. Pretty classic. If it happened around the Fed, this happened around the Fed. So, everyone read into what the Fed said, that, the dot plots, they're looking for 2 easings this year. So we'll see. It's a pretty contrarian call. If you did something like this, ABC, right? And I know Grega's been looking for this for a while. I'd be interested to hear what Grega thinks about yields right now. That perhaps from here to here, we have some kind of fib retrace. Because I know TLT has been playing around with the 61.8 area. Let's see here. Do it from here. All right. I'm not getting all the fibs. Anyway, I would say right around 61.8, maybe 78.6. I don't think we're going to revisit these lows again. A lot of people are looking for, now that we're down to 2%, and we're down to 2%, a lot of people talking 1.5 yields, I heard on CNBC, which would be a record low. Well, not quite a record low. We were 130 back here in 2016. Well, if we had a move like this from here, I think it'd give us a 4% 10-year. Okay, so those are the things I'm looking at this week. One last cross before I turn it over to the team. The best team on the net is Euro Pound here. I think there's a shot for one more high up here. He had a decent break from last week. My timing was messed up because I decided last Sunday to just have a piece on, and then it was in my face. So I think I lost 28 pips on that. But I'd like to see one more shot to the upside for a 3. It could be failing here, but I'm going to try and be patient. I don't know about you guys, but Mondays usually aren't the best day for me to initiate positions, because sometimes you get a lot of follow through from the following week. And my favorite day, right? What is it? Tuesday? I like Tuesday through Thursdays for trading, really. And Friday when there's NFP. And I love knowing what these guys are doing all the time. And I'm telling you guys, I'm not BSing you. People that have known me for a while, Ziggy, I bet you would attest to it. You were a regular attendee to on LAR on FX Street. Can you tell a difference since I've been here with Blake and the team? Zig, if you're here. Anyone else who's been following my nose for Pinkard calls for a while? Anyway, you can't beat this team. And let's see. So if I told you that you could retain Blake for intelligence gathering, just Blake, all right, or Grega, when you total them all up for, I don't know, $15 a month, would you do a consultation with Blake Morrow? How about with Grega Horvath? Okay, there's $40. All right. On some macro, there's 60. Best review, great trader. He's given away so many great trades here in 2.5 years, right? 100. I'm a host. Sometimes I'm funny. $10. 110. Joe's like me. We're promoters. $10, Joe. 120. Paulie's worth 20. He is so passionate about the markets. You could hear it in his voice. He's so excited going through the bias chart. Amanda, $30 for Amanda with her, bearish cable work and everything else for quite some time. Andre, $20, Andre. You're 20. All right. Isn't it worth it? Okay. Anyway, just giving you an idea of the value. And really, the value is not in the website, it's who's creating the content for it. Don't you agree? I know how hard these guys work to keep the analysis up to date and push alerts to everybody. How are you, Blake? I hope you had a good weekend. I feel pretty tired this morning at 4 a.m. when my alarm went off today.
Yeah, it's always rough in the morning on Mondays. How you doing?
Oh, man. Okay. Pretty good. It was beautiful out here in Southern California. You know, Blake, I dreamed of moving to California when I was in junior high.
You dreamed of moving to California, but
Yeah.
But where were you?
Chicago.
Oh,
Okay,
I would have dreamt of moving to Alaska or anywhere out of Chicago.
Well, I'm watching the Rose Bowl with 3 inches of ice on my window. Okay, and seeing people out there getting a tan, I go, I'm moving there. And then Jan and Dean's sealed it with Surf City, 2 girls for every guy. So I left with a couple grand in my pocket at 22 in an old Cadillac.
Well, that's the way to do it.
Go west, young man.
Yeah, it's funny. I had my buddy who had moved to San Diego. He actually moved to Oceanside in the 80s. So 80, 84, 85. He moved with his family. Calls me up on his graduation day. He's like, I got accepted to ASU. And when I picked up the phone, he's like, hey man, I'm going back to Phoenix. I got accepted to ASU. I said, that's funny. I just got accepted in the Marine Corps. I'm going to San Diego for basic training.
Funny. Yeah.
And so we swapped spots. He went to ASU and I went to, I went all over the place.
It was a lot nicer back then. Like, it wasn't as populated. San Diego was.
Oh yeah.
Now it's like Orange County.
Yeah, it is definitely populated. And, people always look at our real estate here in Arizona and wonder why prices have gone, through the roof. And I think a lot of it is from the overflow that you get in, from California. Yeah, we get a lot of overflow there. So anyway, I want to say good morning, everybody. And Dale, there's a lot of times that I wish I was in Southern California. That's for sure. It's one of my favorite spots in the United States, for sure. Now, you were mentioning about gold, and I pulled up your Adam Momentum Capital. You've interviewed him before.
Yeah.
Here's the free COT data. Really interesting. I pulled up gold here because you mentioned that,
people are telling me commercials have a very large short.
Well, let's take a look at speculators, and then you got producers and users here.
Yeah.
Which, they're relatively long.
They're bulled up.
Speculators are long, and so I don't know about as far as institutions are short, but they must be, because if you got producers and users that are long and speculators that are long, maybe that is true that institutional traders are short. But the fact of the matter is gold's breaking out, and the DSI, if you guys missed it over the weekend, on my week ahead video,
125.
No, it's 94, 94, 97. 94. It's up there. And so, I think gold's very bullish. I'm not buying gold here. I played it to the long side 3 times last week and made money every time. Did really well with it. And I do think it's bullish. I just don't know if I'd want to be bullish right at this moment in time. I think that the risk of a move down in gold is quite high at this point intraday. I would think that we either come down and reset ourselves here, or maybe even break a little lower towards 1380 before making another move higher. Now, the obvious question I get from traders, this is the very first question that I get from people is, well, if you're bearish intraday, does that mean you're going to short it? No, not necessarily. I don't, when I'm as conviction long bullish as I am right now in gold, what I'm just looking for is I'm looking for a some sort of pullback to be long. Um, and this is, I had this conversation with Jack last week. He's the young man that was. If you guys don't know who Jack is, and he's in our chat room now, he's not in there today because I think he's in Colorado at the moment. But anyway, his father is one of the coaches for my son's baseball team, my youngest son, and so I've known this family for 5 years or so, and it just so happens that the oldest son, who's 17, no 18, he got interested in currency trading like 6 months ago, and he's been learning all he can, and we were talking at the end of the baseball season, the spring, uh, about currency trading, and it just so happens that not very many of us live in the Phoenix area. Most people that are currency anybody's live in New York or London or whatever. So he'd contacted, or it just so happens that we all knew each other, and he wanted to come sit with me. Anyway, he came and sat with me last week, and then a few weeks ago he sat with me for another week, and so he spent a total of about 2 weeks with me for a couple hours a day. Young man, 18 years old. He would get up at 4 o'clock in the morning or 3:45 and come to my office, and it's pretty cool to see a young pup get up that early and really put his best foot forward. So, but we were talking about this dynamic last week of trading, when I said to him that a lot of traders really get into trouble because they say they'd ask me a question: are you bullish? The euro, for example, and this is an example. I'm just giving you an example here. Are you bullish the euro? I would say no. Then why don't you short it? And I'm like, well, that's because overall I might be bullish the euro, but I don't want to, and I think it might be coming down near term, but that doesn't mean I want to short it. And some people can trade both directions, but what I found is most traders are better when you find a trend, or you find something that you want to do, and you look to play back into that trend. And that's the way I tend to trade the markets for the most part. There are certain instances where I can trade either direction. I might find some sort of counter trend trade to do based on other reasons, but usually when I have a pretty bullish or bearish bias, I tend to stick with it. And like, for example, gold, I have a very bullish bias at the moment, even though I think it's near term, it's going to come down. I overall want to be on the long side of that particular trade. So the question is, would I short gold right now? No, I won't. What I'm looking for is I'm looking for places to be long. So whether it's down here at 1395, or whether it's down at 1380, I'll get long. I just need to figure out where the best place is, and usually the reason why I'm picking either here at this trend line, or maybe even lower at the breakout point, is usually has to do with some sort of correlations in the market. When I have some sort of correlated reason why I'm going to be doing that, whether it's a macro development, whether it's it's maybe other um, asset classes tend to be moving that direction, and that's why I want to do it. I don't know. I have to wait for it to get here. That's why I don't have like an open order to buy gold at this moment. I'm looking for reasons to be a buyer of gold, and I'm just trying to find the right spot, which isn't at current levels, not for me anyway. But anyway, I just want to kind of explain that dynamic because I think it's a good it's a good topic of conversation, especially when we've had big moves in a lot of these pairs, and you're probably looking for places to fade them, and instead of fading them if they're really strong, maybe the better thing to do is just wait for some sort of pullback. But that leaves us with periods of time where you may not be doing anything. Like I look at the euro dollar. A lot of people are looking at the euro as a short right now. For me, I think the euro is pretty bullish, but I'm not going to ignore the fact that we're at 127% extension of this last move higher. Longer term, we're at a 38% retracement of the highs back here in September of last year to the lows. And intraday, we're probably pretty overbought. Look at the relative strength; we're overbought. I do think that we are also have an ABCD completion, which you can see it's right here. AB equals CD, and I'm using this hourly. A, B, C, D at the 127% extension. So yes, above 114, you might be able to take a counter trend short, but you got to ask yourself, how long are you going to stick around if you're going to do that trade? How long will you stick around in this trade if you're playing counter trend? Like for me, if I was trading counter trend the euro, I probably wouldn't look more than 15, 20 pips to get out of it. So with that being
You're
said,
the antidote to FOMO.
What's that?
Your analysis is an antidote to FOMO for people, because your whole presentation's about all the crazy ideas that people have about counter trend, and you talk about how you don't have to trade counter trend, and you could just wait for the market to come to you. So
and I'm not saying that I don't. And I'll give you an example of a trade. There's one trade that I took this morning, the only trade I've taken this morning, and Coach, that's the U.S. dollar Canadian, and I bought a little bit off of these lows, and I bought 131.84.
Yeah.
Okay, and I'm up a few pips now. The question is, and this is pretty much the exact thing that I was just talking about. It's like, okay, if I'm going to trade counter trend, I'm going to find currency pairs that have moved to levels that I think are overbought or oversold, like the dollar Canadian, for example. Yeah. We hit the 127% extension, a lot of divergence here. So I picked up the dollar Canadian down here, and I put my stops I just put my stops below the today's lows. Could I get stopped out? Yes. Is my conviction high? No. Did I take a big position? Absolutely not. And I got a question from one of our traders in the chat room. Hey, Blake, is this a longer term trade? And my answer was, I'll be lucky if I'm in this thing for more than an hour. I mean, that's right. I'm not going to stick around. I might be able to squeeze out 20 or 30 pips, maybe even make it all the way to 132.70. But I'm also looking at crude oil, and I'm like, okay, well, crude, which has been really has had a decent bounce, might continue to stay weak though. Here's a decent bounce.
So, basically the message is lower your expectations on counter trend trades.
Lower your expectations and really take smaller positions. I mean, if you're gonna do it, like I'm in 1/3 of my normal size trading the dollar Canadian long, and I'm up 5 or 6 pips. It's like, okay, well, I'll be lucky if I can take 15 or 20 out of it, and I'm taking a really small position. So is today the day that I'm looking to make, a home run type of trade? No, it's not. Today is going to be, counter trend consolidation, try to scalp a little bit in and out of the market. And if I can make a few bucks, I'll do it. But I am not swinging for the fences today. That's for sure. Because when you are going counter trend, it is way more difficult to make money. What the better trade would be with the dollar Canadian, if you really think it's going lower, is you play the bear flag and you try to short the heck out of it at 132 and a quarter. That right here is the better trade, in my opinion. And
that's a fastball down the middle of the plate. And right now you're swinging at curves.
I am. I'm trying to, I am,
just
if you're
trying to make contact.
If you're using the baseball analogy, correct.
Yeah.
Great
mentoring, Blake.
Well, thanks. But I just want to explain the difference between, trading with the trend and maybe trading against the trend. I'm a really piss poor counter trend trader. I'm just not very good. I tend to trade a lot better with the trend. And, you could argue with me, well, Blake, if you're better at trading, with the trend, why don't you just trade only with the trend? And that's, this goes back to what I was originally saying, you sure as hell can. And that's going to leave some days of inactivity. And if you're willing to do that, then so be it. So anyway, nothing's really changed. Let me just really quick say this before Steve comes on, because I left him a lot of stuff to talk about, a lot of different currency pairs to go over. And obviously, if you guys want my analysis on the pairs, if you're a ForexAnalytix subscriber throughout the course of the day, and at the end of the day, if you're reading the basic technical analysis, you're going to find my analysis throughout the course of the week. That's where I post all my analysis on all these particular pairs. But what I did want to say is not a lot's changed from the week ahead video that I posted over the weekend. If you haven't watched that, make sure you do so. And we have some pretty big breakouts that have occurred over the course of the last couple of sessions that you have to really take heed of. And I think that I think the Euro's going towards 114.50, if not higher. And I just want to be able to play the euro on the upside on any any deep dip. I'm looking 113.50 if I can get long, and I'm just hoping I can trade it on the long side down there. I'm just hoping we get there. So anyway, I like I said, it's fairly slow. I wanted to leave a lot for Steve to cover this morning, and I'm going to bring him. And Stelios is back from vacationing on the islands of Greece. What a crappy life that guy lives.
Still away.
Yeah. I bet you're still away. At least in mind, you are. How's not in body? So, how you guys doing? Good morning, Steve. Good morning, Stelios.
Good morning. Good morning.
So, Stelios, you finally got your wet dream came true, and the precious metals broke to the upside. Dale pointed out this morning silver is a little bit underperforming, and he rightly pointed out that silver is going to be the weaker of the two, and silver's down on the day and dipping lower here. So, what are you guys thinking about these precious metals moves?
Well, personally, I think there is always a reason for a move, and we all know silver is an industrial metal, so it's not just a monetary metal. So when the global economy starts to turn lower, it will be affected. However, I still think that being a precious metal and this correlation with gold, it will eventually pick up. Very frustrating that it's not yet, but I'm still long, and I'm holding on to that.
Okay. Long like Donkey Kong.
Steve, Donkey Kong was even before your time as a gamer.
Not actually. I remember myself at the age of like 5 playing on those machines that they put in hotels, etc.
Oh, well, that means Dale was at least 70 at that point. So
probably 75.
Yeah. So, all right. Well, cool. Well, hey guys, I'm going to pass it over to you. I just want to wish you all a wonderful trading session. I actually just got out of the dollar Canadian for 10. I took when the bid hit 94, I just hit the bid. So, so that's how I'm trading counter trend on these trades. If I can make a few pips, I do it. And
Nice.
then I just
Hey.
scurry off into a corner and wait for something else to develop.
Hey,
So,
Blake, I'm still
yeah.
mastering Pac-Man.
You good luck. You're going to be
Mrs.
working on that one
Pacman,
for the
yeah.
remainder of your life, I'm sure. All
Oh,
right.
look, he just ate another guy. Oh,
Ghost, you mean?
an FX trader. It's FX Pac-Man.
All right, guys, have a great one.
Blake.
And make sure you guys
Bye-bye.
visit our webinar sponsor, Forest Park FX. And Steve, I'll pass it over to you.
See you, buddy.
See you guys.
Okay, mate. Bye-bye.
Thanks, guys.
Hey,
Okay.
Pac-Man.
How's it going? Did you guys miss me?
We did.
Oh my God.
You know how I feel.
Yeah.
He's he doesn't express his emotions that much. Uncomfortable with, Tell Stelios you love him, Steve. Prove me
I love
wrong.
you, bro.
Oh man.
Oh wow, that's right.
That's it.
What a moment.
Beautiful.
So what do
So
we do? What's going on, Stel, with Boris Johnson? Is he the guy?
well, it looks like Boris Johnson and Jeremy Hunt. Boris Johnson easily won in the excuse me, in the parliamentary vote, but the winner will be voted by the Conservative Party, not just the members of parliament. This is a few thousand members, if I'm not mistaken. So he seems to be the hot favorite, but it's not a done deal. But I think we can assume that he will be the winner. Now, what he's going to do after that, I don't think even he knows at this time. But what I want is I want to see movement. I want to see something different to what we've had for months now. And Theresa May, we can all agree. Oh, Simon says 160,000 members. Yeah, okay. There you go. Thank you, Simon. What I want to see is I want to see some movement. I want to see something different. And with Theresa May, I think we can all agree she was a bit of a mess in that respect. She always went back to the Europeans trying to get some kind of a concession and never got it, and effectively bringing the same deal to the table over and over again. Let's see what Boris Johnson can do, if he has any kind of leverage, or the fact that he's a little bit unpredictable, and some people say crazy, but I'm not going to say that. Maybe that's going to scare the Europeans a little bit. I doubt it, but who knows? So that's what's happening in the UK. We have a little bit of a little bit more waiting, but we should soon know the result. Trump says the US needs rate cuts. Yeah, well, Trump would say that.
Of course it does. And you know why, Stelio?
Why? Because he's linked himself with the stock market, and he wants to.
It has the strongest economy it ever had in the history. That's why it needs rate cuts.
Yeah, but seriously though, he has from day one.
And if the economy becomes a little bit stronger through the rate cuts, then it will definitely also need QE.
Yeah, exactly.
And you can throw the economic book out of the window.
Yeah, it's crazy what we're living, but that's Trump.
You want to know when you could really throw the economic book out the window? We were minutes away from war last week.
You think so?
I know so.
I have my doubts.
You do? You don't think that they were ready to go? And he called it off?
No,
you don't believe that news. What do you think happened? No, they weren't prepared to strike?
I don't really know. Prepared to strike. I bet they're always prepared to strike, in that area.
No, I mean, they had gone out and said, people not to no-fly zones.
Let me say it oppositely. Trump doesn't strike me as the person that would care about 150 casualties to call off an airstrike.
I'm not saying that was the reason, but he still called it off.
That's what you mean. I believe that the main reason is because they tried to sell two different stories. The first one had to do with the tanker. The second one had to do with the shooting down of the drone. None of which really moved, the viewpoint of the rest of the allies. So I think
allies? It was the generals that didn't think it was a good idea, that this is not Syria.
Yeah.
Okay.
Plus,
the Iranians have been preparing their military since the Iran-Iraq war, and they've been fighting wars with proxy armies, and they're not going to be, it's not going to be easy. Okay, there's going to be repercussions, and what I'm worried about now is that they bait him into a war, that they want the war. That's what I'm worried about. And if they keep doing things, there's no way he's going to be able to just.
I don't think anybody wants to take on the U.S. in anything military. I mean,
I don't know. Well,
but yeah,
then,
I see no real benefit from wanting to take on the U.S.
On the other hand,
the benefit is the apocalypse that they're all looking for in their imam to come and rule the world. And I know you're laughing at it, but they will lay down their lives for that. Okay.
Yeah, that's undoubtedly
Okay, so that's it. I'm not saying anymore. But everyone takes this so lightly, and it's not. Maybe it's because people are nervous about it, so they want to laugh at it. But we were that close to war last week. All right, I'm going to take a break because my blood pressure is
actually
up.
You know what? This shooting of the drone is good for the U.S. economy. The more drones they shoot, the more they get to build. So more production.
Twisted logic. Let's have a
it's great
because it boosts the GDP. Yeah,
that's great.
Yeah,
okay.
Okay, like the Great Recession was great,
but not for you. As you said many
for
times,
anybody.
and almost
not for Greece either. They've had their Great Recession for what, about 10 years now?
Yeah,
but we're the lucky ones.
You're like Japan. You guys are like Japan.
We never exited recession, so nothing to worry about.
Yeah, you're used to it now.
There is a Greek saying that goes like, if I translate it, that if you are wet, you're not afraid of water.
I love that one. Good one, man.
Okay.
So, Stelio, that's it.
That's it. We had Trump also threatening more sanctions on Iran. I don't know what's left to actually sanction.
Yeah. And I don't think that anybody cares or the market is going to move because of sanctions on Iran. I don't even know if crude will move on that. But if something moves, that's going to be it. Crude, by the way, has had, and we're going to visit crude. It's one of the main charts we're going to look at today. Has had quite a strong move last week, undoubtedly. I still think, in the grand scheme of things, that move looks corrective. But of course, we need a little bit more price action to determine that with certainty, because that last leg higher has been strong. Now, starting from gold obviously, has broken out. There's no question about it. I just wanted to show that I'm monitoring the extensions of this move lower within the triangle, the last, big move lower within the triangle, and the 127% extension comes at 1,422. So that's a possible area of a pullback that I'm looking at, considering also that the RSI is as 85 at 85, etc. Keep in mind, though, that I'm not advocating for somebody to try to fade gold. I'm just saying that, if you've been long, I would be a little bit careful. We might see a pullback from there. I do think that as long as we keep trading above 1350, 1360, dips should be bought. So the direction of the trend is, until proven otherwise, higher after breaking above a multi-year triangle. So that's it with gold. Now, having to do with silver, as I've been saying for weeks now, is silver looking better? Yeah, it absolutely does. I mean, it has broken above this descending wedge. It's been moving higher. It did get rejected at the end of last week from the 61.8 of that last move lower. But I wouldn't spend more time analyzing silver. Just to say here also that $15, 15 cents, somewhere there is an area of support. We might be seeing a short-term consolidation, like a little triangle manifesting here before moving higher. But as long as the gold-silver ratio keeps pushing to multi-year, almost to all-time highs, you have absolutely no reason to be looking to buy silver against gold, because gold is overperforming at the moment. And as you see, the gold-silver ratio is in a very strong uptrend. So if you want to be long until proven otherwise, I think that gold should remain the vehicle of choice. And now, on the other hand, if you want to have exposure in a metal that is also associated, with risk appetite, then palladium is the way to go. Palladium remains very well bid as well. At some point, it should have some kind of a little pullback, but I do think that's in buy the dip mode as well. Copper, one last to show before we switch to another category of charts. Copper still finding it tough to break through this confluence of resistances at 272. So, I would be a little bit skeptical here. Buying against resistance doesn't make much sense. There is still a chance that this is some kind of a bear flag and we might move lower from here. In any case, it seems to be holding close to resistance. So, the fact that initial getting rejected from here hasn't accelerated the metal lower is something that should also be taken into account. But I wouldn't be trading it at current levels one way or another. Stocks, very briefly here, consolidation near all-time highs for the S&P. Clearly there is no reason to try to fade it yet, right? Nasdaq, same deal, not at all-time highs, but we're getting very close, and I find it very likely that we're going to end up, registering fresh all-time highs here as well. DAX finding resistance at previous resistance area, but still keep in mind it has broken above this bull flag. So I do think that respecting the upside is the way to go. Same deal here after this little pennant, not so little anyhow, this pennant for the FTSE. In general, as you see, stocks remain quite well bid. And let's go to crude. Crude, obviously, another tailwind for crude is, having strong risk appetite. We know that usually there is a strong correlation between the S&P, for example, and crude. So as long as the indices are doing well, it's one extra reason for crude to be rebounding. The other, of course, and the main one is the dollar moving lower. And I'm going to go to the dollar index just after showing this. Crude has rebounded quite strongly, but keep in mind that this 58, 57, 50 to 58, 50 area is an area of resistance. Keep also in mind that the 200 DMA is also approaching this area. As long as the 50 DMA, the 50% fib is also at 58.50. Bottom line, be a little bit careful here, buying against so many resistances that are cluttered within less than $1. Might not be such a good idea. That's why I think that this area is a key area to watch. It's going to help us determine what's happening from this point. Even if we get rejected from there, though, keep in mind that 54.50 to 54.75 might act as support. So there might be, even if this is a corrective move, it might prove being a little bit more complex, right? Very frequently, corrective moves have an element of complexity to them. Impulsive moves usually are much more straightforward, very easy to read. So something like that, for example, might play out here. Now, having said that, let's have a look at what is the market focused most on at the moment, which is the dollar index. So first of all, the dollar index has definitely broken down. Now has broken down below this channel as well, below the 200 daily moving average, below the 61.8 of that last move higher. So multiple areas of support have now been breached. And I do think there is more downside to come. That is why I was looking after the Fed for an opportunity to sell some dollars. I did so. I did sell the dollar against the Norwegian kroner that is moving quite nicely. I'm going to show it just after this. Obviously, crude rebounding is helping as well. So next area of support here for the DXY is this low at 95.03. I do think that we're going to test that area. I do think that we might even breach through that area. I do think that this whole move higher might even prove to be corrective. So, in general, I'm quite bearish the dollar, especially now that we have a reason to be so. Having said that, I'm, taking it one day at a time. So I am now actively looking for pullbacks to sell more dollars against more currency pairs. Um, so keep in mind that any rebound of the dollar, I'm looking at it as a corrective move in the short term. Okay, that is a given now. This is how I'm now wired. I do think more weaknesses ahead for the dollar. Even if this is a corrective move, keep in mind that it can go on for several weeks, right? So that is something to consider. Speaking of, a possible rebound in the dollar, as you see, uh, the cable is finding once again a resistance at this area, this 127.50, 128 area, being resistance once again. Um, this is one of the reasons why I would be willing to buy, several pairs or several, assets against the dollar. But I'm still very, very skeptical about cable. I think it's obviously still underperforming. And I think there is no reason to gamble with that. So keep in mind, cable is at resistance at the moment. For me to become more constructive, I would want to see a clear break above this area, which for the time being is not happening. Even the RSI rebound so far isn't really showing any momentum that would make me want to buy it. Now, the USD NOK. Yeah, I said about the USD NOK. So USD NOK has broken down below this confluence of supports at 860. Next area to watch is 840, and below that things become a lot more dicey for the bulls, because keep in mind that this area is also this multi-year corrective move lower, previous resistance. So I wouldn't want to see, if I was long the pair, break down below this and within this descending channel, because I think that then we might be seeing a lot more weakness. Having said that, since I think that crude might be in a corrective move, if crude finds some kind of a high, that will help use the NOK hold this 840 area. Irrespective of that, I do think that 840 is going to act like a magnet. So, I'm still holding on to my position. I think that I'll have an opportunity to take it out there. My entry is a little bit higher than 870, so it's going to be a good trade if we make it all the way down there. Now, the rest of the commodity currencies are still not convincing, in my opinion. For example, okay, we see this rebound for the Aussie after incrementally posting new lows from a previous horizontal support area. But once again, as I was saying the previous time we were rebounding, I can't really, turn bullish as long as this 70-30 area is still holding as resistance. Now, obviously, if the dollar, keeps moving lower, at some point this is going to happen. But until that happens, I'm going to remain quite skeptical in this move. So, I'm not close to actually buying the Aussie. And as a matter of fact, Kiwi, more or less the same deal. You can see it here. Previous time we found the resistance a little bit lower than the area I was looking for. 67 to 20, 10 was the area. We found the resistance a little bit lower, like 10, 20 pips lower. Once again, we're rebounding from a previous low. This is going to be an interesting trade, because if we actually make it up there and we actually break above 67.10, then we're going to have in hand a double bottom formation. So then I'm going to be more than happy to actually buy the Kiwi, looking for an extension towards 69.50 or so. But until that happens, I'm looking at this as a range, because until proven otherwise, that is what it is. Okay, now having to do with the USD CAD, Blake already covered that. I do view this consolidation, the USD CAD, as corrective. So I would love to sort the rebound as Blake was showing. I wouldn't be trading it counter trend, and I think that Blake did the right move for scalping it for 10 pips and getting out of it, because it's quite dangerous in my opinion being long. It can rebound from there, but it's quite dangerous. Let me go through some of your questions and get some ideas. Hi, Steve, what's your opinion on euros in EuroKey? Sure, let's have a look at them. So, Eurosi, EuroKiwi, last week, they posted some very interesting reversal candles. You can see it here, for example, if I zoom in, you can see this candle here. That was a beautiful key reversal. So far, it hasn't been invalidated because we haven't traded above its spike high. But this is not the price action that we want to see. Okay, so I'm not taking it any more seriously into consideration after seeing the candle that we had on Friday. Keep in mind, that it remains, Euros remains very well bid. It might as well even extend to fulfill this bull flag, because don't forget, this is a textbook bull flag that we had marked on the chart, and by definition, this bull flag has a target at 166.30. So, since that key reversal so far doesn't look like it's going to be playing out, we might extend to test that previous spike high. We might even extend to a new high to fulfill this bull flag. Okay, so I won't be buying them here, but I'm telling you that so far it looks like they might have more upside. Same deal with the Euro Kiwi. Very nice reversal last week, but it immediately found support at the horizontal support resistance area. And Friday it had a good day, which means that it remains constructive. And the next upside area is this horizontal support resistance area at 174.30. So it is what it is. I mean, momentum has definitely slowed, but they remain in an uptrend. Now, at some point, sooner rather than later, I do think that we're going to have a reversal and see them actually move lower in a big corrective move, even an impulsive turn. But we're not there yet. Pound Aussie and pound Kiwi, though, I have to admit, are in a totally different situation, because, for example, you can see as Euro Aussie is threatening with a break new highs, pound Aussie so far isn't convincing that this rebound higher is not simply corrective, because it has all the corrective characteristics you expect to see. I mean, the move is like slow, overlapping, choppy, and after so many days, it has just retraced 38.2% of the last move lower. So pound Aussie definitely looks more bearish, and the same deal here with pound Kiwi. So definitely, if you're looking to short some of those, I would be looking towards the pound pairs. And one extra element to point in that direction is the fact that I had actually envisioned a move like that in the euro pound, and it worked quite nicely up to the point that it was getting rejected from that area, that confluence of resistances. But the move lower found immediately support at the first support area, and now it looks more like a consolidation near the highs. So I would be quite careful here, because the euro pound doesn't look like it wants to, seriously move lower. And as long as it doesn't, it's logical to expect that the pound crosses are going to underperform the euro crosses. Okay. Now keep in mind, though, even if we break above this area, we have this multi-month channel, descending channel. Its resistance currently passes from 90 cents. So, just 50 pips above where we currently are, we have this trend line resistance, which, is quite important. So I would be quite careful now. If we slice through that, I think that euro pound is headed much, much higher. Okay. So keep that in mind. I wouldn't be trying to fade the euro pound if we actually make it above 90 cents. I will be actually looking for it to extend higher and perhaps even accelerate and gain more momentum. Let me go through the rest of your questions in the chat. Use the Swiss, absolutely. Use the Swiss is one of the pairs I was very actively looking for I would have actually traded the USD Swiss because I was, a strong believer that it's going to break down. What held me from doing so, and perhaps, mistakenly, I mean, I should have anyhow taken the trade, most likely, is the fact that we had this false break lower and then we moved back higher once again. This really, made me more skeptical because other than that, I really liked the momentum we had lower. I like this move higher as a corrective one because it has all the corrective characteristics. So I was really expecting for it to break down. As I said, though, I didn't trade it because of this false break lower, which made me very skeptical following that. Now, after getting rejected from this parity area, as you see, the momentum has been very strong since. So I do think that the USD Swiss remains a pair that should be sold on rallies. So, for example, this 98.50 area, which I was writing in the chat room that I was looking for it as a target. If we actually break lower, on a 4-hour chart, we had an ascending wedge here. So that is what I was looking for a full retracement of that wedge, which, should have brought price action back to 98.50, should act as resistance from this point on. So in my opinion, any rebound towards 98.50 is a good opportunity to sell the pair and look for another leg lower towards the 61.8 of this, larger move, currently at like 95.88. Okay. So that's what I think about the USD Swiss. Definitely a sell on rallies until proven otherwise. We have divergence on RSI for EA. The EA is Eurosi. Yeah, that might be the case, but keep in mind that sometimes RSI divergences need some time to play out. Okay. As I said, I wouldn't be buying the Eurosi here, but that doesn't mean that it can't move higher before it actually rolls over. Okay. The fact that we are also seeing this divergence between the pound crosses and the euro crosses, meaning the pound crosses seem to be rebounding in a corrective manner while euro crosses seem to be pushing the highs, also makes me skeptical because yes, this comes from the fact that euro is overperforming the pound as we saw in the euro pound, but keep in mind that euro cannot really be diverging for a long period of time and significantly diverging from what the pound is doing. So this divergence that euro Aussie and euro Kiwi are toying around with posting new highs while pound Aussie and pound Kiwi are far away from that, is also signal, in my opinion, that euro Aussie and euro Kiwi might turn lower in the very near future. But that doesn't mean that it's going to happen immediately. Okay, so if you're looking to trade on an RSI divergence and on a divergence between the euro and the pound crosses with a tight stop loss, I think it's a mistake. Okay, that's what I'm trying to say. We also have a question about the Aussie Kiwi, which just came in. My opinion is that the Aussie Kiwi has a decent chance of pushing higher once again. And the reason I'm saying that is because after breaking higher from this descending wedge, we had certainly a very strong move higher. Within a few days, we covered, quite a lot of ground. And following that, we have had a very slow and choppy move lower. So, in my opinion, this is an impulsive move higher and this is a corrective move lower, which means that even if this whole thing is part of a corrective move higher, it's missing one leg. One leg that would probably bring the pair on this significant confluence of resistances above 108 at 108.30, 108.50. Okay, so bottom line, I think that there is a very, very decent chance that Aussie Kiwi is going to break above this descending channel and push higher once again. 108, 108.50 would be my target in that case, but this move hasn't started yet. Okay. Another question about economic news for today. Very short, very light on economic news today. Coach, do we have an interview today, by the way?
Yes, sir.
Okay, perfect. I think I've covered all the questions with just 1 minute away from the top of the hour. So if your guest is here, I see no reason why you can't start.
Okay, thank you, Steve.
Thank you, Dale.
Once again, a great roundup of everything that's happening. As you can tell, Steve's not afraid to express his opinions with conviction.
Speaking of which, I'm sorry to interrupt.
It's all right.
I remember that there was one pair I specifically wanted to talk about, and I didn't do so, and that is the USD SEC.
Time's up.
Yeah, I forgot to show it on Friday, actually, and I also forgot to do it today as well. The reason I wanted to show it on Friday is because on Friday, we were breaking down from this ascending wedge, a very nice ascending wedge. I would almost describe it as perfect. And by
with
perfect,
a throw over on
exactly,
top too.
Because by perfect, I'm throwing the element of I'm putting in the element of the throw over, exactly as you mentioned.
Yeah.
So a very nice ascending wedge had its throw over as well, which very frequently, is like the last hurrah to, get bears off the market and get people long at the worst possible point.
Right.
So in
Mr. Market.
Exactly.
It keeps trying to fool people.
Exactly.
Steve.
So in my opinion, another pair that is very interesting in the way it's positioned, it has a very interesting structure, and definitely one of those that I'm actively looking to sell any rallies is the USD SEC. So that's why I wanted to show it. Thank you, Coach.
Nice trade, Paul. Real nice trade. Okay, Karush, I'm promoting you to panelist. And I'm going to see if I have you muted. I'm going to unmute you. And you'll also have control of the screen. You're probably too young to remember outer limits, but you're taking control of our television set right here. And really nice to meet you. Welcome to Face, Karush. So you'll see.
Hello.
Hi, there you go. Hi, Karush.
Awesome. Hi. Thanks for having me on. I really enjoyed the show up until now.
Oh, okay. Well, it's only going to get better now because you're with me.
I'm sure I can top that.
All right. So you can screen share. So if you just hover your mouse over that, it'll say share screen. And then we could see your setup and different see certain charts, whatever's on your radar while we're talking.
Yeah, there is a green share button. Just click on it and it's going to ask you if you want to take the screen from me. You say yes, and then it's going to make you choose which screen you want to share.
There we go.
Perfect.
Awesome. Can everyone see my screen now?
Got it. Yeah. We have XTB. So we're going to be talking cryptos. I want to start here with you, Karush. How long have you been doing this?
Reason we got crypto up is because, that's what got me into it about 2.5 years ago now.
Okay. All right. 2.5 years ago. So tell us what you were doing before that and what it was 2.5 years ago that had you start to look at charts and trade the markets. What's your background before you became a trader?
Awesome. I'd love to. So I was heavily into my mathematics at university. That was my passion for a while, and then started a business while I was at university. One of my friends got me into it. It went well, got a little lucky. And then from there, pretty much would jump from business to business, buying and selling things similar to trading, but out there in the world. And eventually, around 2016, one of my close friends who works at one of the banks involved with, I don't know if you were familiar with the Ethereum Enterprise Alliance.
Okay, I'm not. I'm familiar with Ethereum a bit.
This was. I'm not too into the fundamentals, but at the time, this was a whole bunch of banks that were in some way getting very involved in Ethereum, and he had a bit more information than most on it. He told me you should check out this crypto stuff, And I'm pretty sure you know how it went from late 2016. And then from there, I got very much into crypto. I saw the numbers going up and I thought, wow, this is incredible. And bear in mind, before this, I was very into investing, but to me, technical analysis and trading was absolute voodoo. I did not think any of it could possibly work.
Why? With the math background, I'm a little surprised at that, because the market is geometry in many ways, isn't it?
Now I would completely agree with you that the mathematics is just ingrained into it. Every single tool has, every single
the whole universe is ingrained with it. So, right?
Couldn't disagree with you there. I thought there were too many variables. So one of my mathematics background was specifically statistics, and one of the most difficult things in statistics is multivariate analysis. So in my head, there were far too many variables to possibly be able to pin them down and be able to make accurate predictions off of them. So every strategy I used in trying to benefit off the market was extremely passive.
Okay. So what brought about the paradigm shift and the breakthrough that technical analysis had validity, although plenty of variables and interpretations with this? To me, it's not the candlestick, it's who's viewing, it's who's looking at it. It's not the vehicle, it's who's driving the car. So let me ask you this: what convinced you that you could look at candlesticks like you were showing us right now, and that it was less variable and it was worth risking capital on?
So at first, my reasoning was how a lot of people get into the markets. I got in at a bull market. I had a few lucky trades, and I thought I was a genius. I think every trader has that moment where they're like, "Oh, I am a genius. I can predict this." So I would look at the candles and think, "Oh, maybe I am clever because I'm making so much money." And then a couple losses kick in, and you start realizing the game isn't that easy. I went back to passive, and then what was my shift was I actually managed to find a few traders on Twitter who seem to be consistently putting out profitable trades using systematic approaches. So something that is repeatable and you could create valuable data out of. And the way they were doing it was just, sorry?
Who were they?
Okay, so there were quite a few just in the whole space, and some of my earlier ones, I don't want to mention by name because looking back now, I think they weren't the most honest traders. They were just portraying certain, they were marketing it well.
Were they show them with pictures driving their Ferrari and getting on private jets?
Smarter ones than that. So those I wasn't falling for. It was more ones that would.
Okay, who do you respect? Okay, we know there's plenty of charlatans out there. Who did you learn from that you still have respect for?
Oh, well, for that I would love to. There's I don't know if you're familiar with the Trading Room app on Twitter. He's a pretty big handle who promotes trend trading quite strongly. Watching a lot of the things he did, I
feel like a dentist trying to get the name out. Who is he that has trading? Is that
Trading Room app? That is his name. Trading Room app. If I'll type it out.
Trading Room app. Okay. Who else?
So the Trading Room app was a great trader who I learned a lot from. Another one who was really good, I found a guy named Smart Contractor and a few others who used Elliott Waves. And although I'm not an Elliott Wave trader myself, as you said earlier, with mathematics being ingrained in reality, I knew how deep Fibonacci numbers ran in everything. Yeah. And when I saw this system revolving pretty much around using them for reading people's psychology and the aesthetic geometric movements of the market and certain patterns, I was drawn into believing a little more into technical analysis than before, because I realized you can just, like you said, look at the candlesticks, isolate the data that's important, and not get into immensely complex multivariate analysis where you have to bring in every single piece of information.
Any books that influenced you on trading that you've read?
So two I enjoyed quite a lot. One of them would be Market Wizards, interviews with top traders.
Yeah, I've interviewed Schwager quite a few times.
Have you really? I need to go out of my way to watch that.
Maybe maybe in his next book he'll include you.
Well, I mean, I'm still a guppy.
I'm kidding.
Well, only 2.5 years.
It's something to shoot for. Anyway, yeah. So you love Market Wizards, and what else?
What I really enjoyed, and Trading in the Zone.
Oh yeah, it's a very good book. Okay,
see
go ahead.
Yeah, please.
Go ahead.
I was going to say psychology of the game. That's what took me to a consistently profitable trader from just a gambler and occasional speculator.
Okay, so what are we looking at here? And looks like I don't know what moving averages you're using here, but way above all of them. And I had Mark Yusko on. If you're a crypto guy, Mark's a great ambassador for Bitcoin, and he said nothing good happens underneath a 200-day moving average, and everything good happens above it. So what are we looking at here?
So right now we have the 7, the 20, the 50, and the 200.
Okay.
So we're pretty solidly above the 200 over here on the 1 week, and actually we'll go a little lower onto the 12-hour. And well, this is pretty much the core of my trading. It's as I said earlier, I like to isolate data, not have too much information. I deliberately try to actually ignore macro events, except enormous game-changing ones like key exchanges going down, and try to focus on the data as much as I can. I use the moving averages to determine a trend. Here are a few. I don't think it's actually hugely important which moving averages you use, because at the end of the day, all they're doing is figuring out how much the price is deviated from the mean. So as long as you have them spaced out, you can see the level of deviation from the mean price and in which direction we are deviating.
How did your chart serve you from the high late last year to the lows that we finally got this year, from the blow off top? Were you playing the short side? Did you move to cash, or did you give up gains?
So what I was doing was I was controlling my Bitcoin exposure throughout the whole time by rebalancing constantly. So I treat my investing and trading completely separately. So with the investing side, I was passively entering pretty much from the top. So every week I would passively buy the same amount of Bitcoin as far as my investing is concerned.
So you scaled in all the way down?
Pretty much scaled in all the way down, and I increased my aggression as we got lower and lower. So once we broke the 6K resistance, I increased my aggression by 20%, and increased by aggression, not the absolute amount, but the relative amount given to other places I was funneling, compared to other places I was funneling my money into.
Okay.
And
so how did you handle the heat?
Sorry?
So, I'm sure did you have periods of self-doubt doing that? Especially if you started scaling in, above 10,000, did you have some trepidation at all, or you were just had so much conviction that we were going to bottom at 3 and turn that you'd be okay?
So I was ready. So my theory with Bitcoin is that the long-term trajectory was going to be upwards. I did believe fundamentally in cryptocurrencies and that they would serve a very strong purpose in the future. I had a lot of people a lot smarter than me and heavily involved in the space who had given me convincing arguments which I could not disprove. So I believed not necessarily in Bitcoin, but cryptocurrencies as a whole. And the best vehicle to passively invest into it for me was Bitcoin. So if I wanted exposure to this industry, which I thought was going to blow up, the best way to do it was just Bitcoin until another coin overtook it. So I was very much ready to jump ship if something managed to overtake Bitcoin. But as long as Bitcoin maintains its dominance, it's the best place to expose yourself, at least from an investing standpoint, to Bitcoin.
What's been your worst drawdown?
Sorry?
What's been your worst drawdown?
So my trading has actually luckily not gone through a big period of drawdown yet, because I've started off
investing. So you're distinguishing between what you did on the way down to your trading, right? That wasn't trading, that was investing.
Yes. So with investing, I refer to the way I distribute my net worth and expose myself to different assets. With trading, I have specific portfolios that follow different systems.
Okay, because I'm just saying that because I know guys that were day traders.
Yeah.
And the day trade didn't work, so then it became a swing trade. Then they became a position trader, and eventually an investor.
So no, absolutely not. My investing is completely separate.
You're laughing. You're laughing. So why is that funny to you? Have you ever seen that?
Definitely seen that all the time.
Okay. Anyway, a day trade turns into an investment in a hurry in this business. Anyway.
I've seen some day trades. So I've had messages of $1 million portfolio turning into now this is not an exaggeration, $10,000 investment.
Yeah.
So I have seen the absolute extremities of that. The reason I differentiate, because when it comes to my trading, it's completely different because I am a day trader. I don't particularly take the larger swing positions as much. Though recently I have been doing it with Bitcoin. My main method of trading is so I have two main systems. One of them is trend trading, where I find explosive trends on altcoins and scale in on key supports and scalp for a quick profit. And the other method I like to use, which I don't do as much anymore, is I used to be a very aggressive counter trend trader, but the stress was just not worth it because of how volatile and extreme it can be, counter trend trading on 30-minute timeframes.
Yeah, a lot of noise. So everything we talked about is pretty much yesterday's newspaper, buddy. So what I guess the big question for crypto guys, and almost I've had universal response, is this bounce that we've had from earlier in the year in crypto just a retracement of the prior decline or the beginning of a new bull market? And if you believe that, why?
Well, I would think it's more likely to be the beginning of a new bull market, specifically because for a retracement, I was not expecting us to blast through this enormous area of demand turned supply this easily.
Yeah. Okay.
Sorry, my mouse is.
That's okay.
Yeah, there we go.
So if you had fresh money right now, would you just launch and get long here? What do you do?
Not specifically launch and get long. If this is the start of a new bull market, and I wanted to start buying in, I wouldn't buy at this very moment right now. I would go to either the daily or the weekly and take some key moving averages. So say the 7, the 20, and the 50. and I would
look for
try.
confluence. Sometimes they come together, and have you noticed confluence of on your moving averages sometimes is an
So,
even more powerful magnet?
So specific confluences which I really like is when we have periods of consolidation, to wait for the 7 moving average to break the resistance. So if we take a look over here,
I see.
Let the price break through.
I see that.
So let the price break through first, but don't enter then. Wait for the 7 moving average to go through, and that's my bull trap protection.
Okay, it looks like a 3 drive to a top formation to me. So
well, I'm not familiar with that form of trading, but if it is that,
take a picture then. Let me ask you this. So you're talking about where you'd be looking for pullbacks in Bitcoin. Do you think that pullback, someone told me about Ghost Month in August, and Asia's a big participant in crypto. Do you believe that we get that kind of seasonality weakness as they restrain from investing during that month because the ghosts might scare them?
So I do not doubt that it's possible, but like I said,
you know about Ghost Month though, right?
I do not know about Ghost Month. I'd love to learn more about that.
Okay. Well, you take a sheet off your bed and you wear it over your head for 30 days. That's Ghost Month. No, I think it's some type of spiritual or superstition that happens in Asia. I didn't know about it till a week or so ago, but what would be some levels that would be attractive? Obviously, you could go all the way down, like a pullback to 8,000 or 6,000, or maybe we'll never see that major break where we have that major breakout again. 5,800 would be a gift, wouldn't it?
Absolutely. I never like to say never, but I'd be very surprised to see us go to these lows ever again.
Okay.
But again, there are no absolutes in the market. Our job is to just predict what we think is going to happen and is probable, and then make a play off of that.
Do you have any long-term targets in Bitcoin? I know some people are talking in 30K or so for the next wave.
I don't even want to guarantee that there's going to be another all-time. There's going to be an all-time high with this specific run. I'm a very apathetic trader. So with regards to this, what do I see right now? I see an extremely strong uptrend. I see that dips are for buying. So I'll identify key supports. So if we have a resistance and we break it, that's a reversal. That's a good chance to make a play here. Target the upside more aggressively, but I'm not trying to predict how high this move is going to go. I'm a scalper. I'll buy the supports. I'll sell at a greater profit than I've been risking, and continually do that all the way up. And that's what the trading's doing. With regards to the investments, I don't need this to be another all-time high. As long as the long-term trajectory continues to go upwards and I just average in, it will keep making money. So I don't need to or think it's a wise strategy for myself to be trying to predict whether this is going to go to 15K and go back into a bear market, or it's going to go to 40K.
Okay. Why are you on social media? Do you have a business model, or do you mentor, teach? What's your motive behind being on platforms such as Twitter?
So I started it as a way to journal a new system I was trying out on a portfolio. So I would just post every single trade I was doing live, and it got some traction. People started following me. I then posted a few educational videos and people liked it. And I personally was really enjoying it. It's a very fun place to be involved in. I don't particularly do any paid services. I ran one small test group last year of a few people I wanted to mentor with my specific systematic style of trading. and it went pretty well. 9 out of 10 students are very happily trading profitably. The other one isn't fully committed to his trading and has actually started another successful business. But it was very fun, but not something I wanted to pursue any further. So right now I'm just on social media because I really enjoy it. I love interacting with people. I love meeting